Welcome to the 2022 Economic Preparation and Depression channel. I'm your host, Tony. Thank you for joining me on this Tuesday, November 8th, 2022, Election Day, Midterms Day for those of us in the United States. And today I just want to briefly touch on three topics. Please be sure to subscribe to Preach to Me. Support us for the latest financial news, interpreted 100% every day, every week. And this is where we're at, folks. Ladies and gentlemen, we have consumer confidence is near the lowest in a decade, and that could be a problem for President Biden, according to CNBC.com. Could be a problem for our economy as we head into the holiday season, Thanksgiving, Christmas, New Year's. And the amount of layoffs is concerning, especially in the technology industry. It was an area that it's ironic that the technology industry was the one that led the booming economy, quote unquote, for the last 5 years. And now we're heading into a transition zone where now layoffs are going to be expected. Mortgage rates are surpassing 7% for the first time in 20 years. So this is what I want to touch on here. Thank you for joining me. Ladies and gentlemen, let's get right into it. Consumer confidence, lowest in a decade, and that could be a problem for President Biden. We have issues with this economy, as you know, and just 2 weeks ago, 2.5 weeks ago, President Biden came out and said the economy is strong as HELL, quote, and then we've heard the same sentiment the last year that President Trump was in. He said that the economy was a quote unquote booming economy. Now we know that both are, it's not exactly the truth. It's little white lies combined, because the economy is facing unemployment rates still above 3.5 or 4% for the official numbers. Real unemployment is at 8.5% in this economy. The good news is that this economy has held on this long. This $16 trillion U.S. economy has held on. It will be the last domino to fall, we believe. However, the national picture is flipping right now. Which political party is better at handling the national economy and issues of personal finance? Is a survey by the University of Michigan Survey of Consumers. This is of November 4th, 2022. Right now, they say that 77% of Republicans say Republicans are better than handling at the economy right now. 56% say Democrats are better. Personal finance, 72% of Republicans, 52% Democrats. So as you see, the only one in the Democrats' favor was the sole party group, whether it was age, household income, education, or all other factors considered. So this is going to become a huge problem for Democrats, quote unquote, says Greg Valari, chief U.S. policy strategist at AGF Investments. So as you can see, people at the consumer index is down to 58.6. Normally anything above 70 is a good number. As you can see here, it was 88 back in March 2021 before the pandemic. Now we're down to 58.6. This is how Americans feel about the economy. You can take things at all-time low, and for their well-being, because you can see that food, gas, labor, transportation, inputs, even hospitality, every sector is going down or experiencing down. In the stock market, people's 401ks is down over 35% this year, and we still have another month to go left in this year. And so Meta is joining the tech industry's growing list of layoffs, thousands of job cuts by Facebook's parent company, Meta, adding to the string of workforce reductions of companies such as Lyft, Stripe, Twitter. These companies are laying off thousands of workers, and this is just the beginning. Tech will lead the way with layoffs, and then layoffs will go to the more private sector companies, and finally to the public sector, where layoffs will continue to accelerate next year. And this is after seeing, quote unquote, record years of soaring profits and seamlessly endless success. Silicon Valley giants have been forced to manage their resources in an uncertain economic environment. Now, many of the reasons that we say that we're going to a digital currency, many of you have been saying that we're going to a central bank digital currency, or a CBDC, right? Well, yes, that may be the case, but before we get there, there's going to be a transition period of hyperinflation, high prices, high unemployment, high taxes, and a period of transition that's going to be very painful. And President Biden spoke about that earlier this year too as well, that we're going to feel some pain. Well, this is what he's talking about. The layoffs are going to be accelerating, heading toward winter. Winter is coming, and then after winter, we get into next year. This housing market is going to be another thing that's going to be really a big headache, because rental prices are starting to stabilize in some of the bigger markets like California, DC, New York, Houston, Dallas, Indianapolis, Miami, Arizona, but they're still elevated, and mortgage rates are now over 7% for the first time in 20 years. I don't know if you're looking to buy a house right now. I'm not a financial planner, but if you can wait another year or two, that's the best time, because you know that it's going to plateau as the interest rates go up. Housing prices are bound to come down, but not by a lot, not by as much as everyone has initially anticipated, because the big change is that the deflation that everybody's waiting on, including myself, is going to be coming about 3 to 4 years from now, because it takes that long for the whole economy to go into a severe recession or depression. And so the housing market is already showing signs of stagnation. I'm seeing houses for sale signs in different neighborhoods in the Northeast, and the Southeast, and the Midwest, and even West. They're taking longer to sell. They're taking up to 80 to 90 days to sell, and they're getting a lower asking price, below $20, $30, $40,000 below asking price with the housing market. Another thing to look out to, ladies and gentlemen, too, is these used car prices. Look for used car prices to tumble next year summertime, as the inventory builds up and new cars are not selling, because the average price of a new car is above $42,000 for a sticker on a new car. And I don't even think that's like luxury. I think it's like a Honda or maybe Toyota or something like that, or Acura. For a general typical price, or a GMC Suburban. So look for that to come to as well. And finally, I just want to mention that the earnings season, we're going to have more earnings come out next week, and there's one more rate hike coming in December of 75 basis points by the Federal Reserve. What will this do? Well, number one, there's still going to be volatility in the stock market and in Main Street, so you can continue to experience high prices. Inflation will be above 8% for the rest of this year. It's going to 10% next year, official numbers. We can also expect to see more people homelessness, or either more people bunking up together in one or two houses. Like, you look at these houses, you see like 8 cars in the driveway. Well, that's people either doing Airbnb or family members bunking up together to save money, because either way you look at it, you know, we're in a rat race between rent, mortgage, and utilities and transportation. That takes up the bulk of majority of most people's paychecks. And then you have that a special emergency, you know, if something happens in the family, or like this year I've had, or something like that, that takes up the other part of the check. So we have to control our expenses going into winter, continue to stock up on food, water, medicine, extra prepping supplies, solo stoves, rocket stoves, whatever you can get. Now is the time to get it, because prices are not coming down anytime soon, because the supply chain has not been fixed. And as you know, the media has not been talking about that, but the supply chain has not been fixed. We're just going on a just-in-time system, delivery system, and so that's going to be crucial. And then the second thing that's the problem going from winter to this summer is that government spending and personal consumption spending, private investor spending is not going to stop either. And so we spent all this money overseas, and you know, Ukraine and other countries, but we haven't spent any money on the homeland. And that tells you that this spending is not going to stop. It's going out of control, no matter who's in control, no matter who wins tonight or what happens in the political scene. The government spending and the personal consumption spending is going to continue to be out of control. And that spells one thing, ladies and gentlemen. That spells collapse coming to a city, town, state near you. It's just going to take a little bit while to filter through, because like I said, these changes in this massive economy, it takes time to filter through. It's not like a little country, like, I'm not saying it's that little of a country, but it's not like a Greece or a Venezuela, where you only have, you know, you have people, don't get me wrong, you have 30 million people, but it's not like a major economy like a U.S. or a G7 economy. And so it takes time for these to filter through, but the collapse is here, and it is coming at a rapid pace for most American households. So be safe, be encouraged, stay prayed up. I'll talk to you very soon once we get more reports in, as it comes available, when after the effects of the earnings season comes next week. Thank you very much. God bless. Take care.